Greetings, everybody. Welcome to Liberty Call. I am Raymond Dahlman, your humble host, and today is Tuesday, October 17th, 2023. Hope everybody's had a fantastical day out there in the interwebs. It is a beautiful day here in Colorado. The leaves are starting to change. It's been getting down into the 30s at night, so we're getting some of the fall colors around here. If you were to drive a little further west out towards Aspen, I bet it's beautiful right now. I was there a few weeks ago. I guess about 4 or 5 weeks ago, we were out that direction, and the colors hadn't changed yet, but it is beautiful terrain. I mean, kind of hard to drive through, lots of windy roads and cliffs and things you got to deal with, but it is just gorgeous. Anyways, you didn't come here to talk about the leaves or the weather or anything like that going on here in Colorado. You came here to hear about the news and what's going on in the financial world. I know. Anyways, if it is your first time watching Liberty Call, I am glad you're here. Thank you very much. If you could do me a favor, if you could give me some thumbs up, likes, shares, subscribes, follows, hit the notification bell. You want to know when I go live. All right, let's get into the numbers for today. Dow Jones finished the day flat, up 0.04%, 13 points, closed at 33,997. It was in the red, good part of the day. S&P 500 flat, down 0.01, closed at 4373. NASDAQ down 0.25%, closed at 13,533. The VIX was up 3.89% today. It's at 1788. Canada up 0.37. Brazil down 0.44, and Mexico down 0.24. In Europe, Germany also flat, up 0.09. The UK up 0.58. The France up 0.11. Netherlands up 0.19, Spain up 0.12, Italy down 0.09, Switzerland down 0.69, and Portugal up 0.45%. Russian exchanges were split today. MOEX up 0.38, RTSI down 0.02. And the overnights, the Nikkei in Japan was up 1.2%, Australia up 0.42%, New Zealand up 0.73%. In China, the Shanghai was up 0.32%. The Shenzhen Component up 0.15%. China A50 up 0.41%. DJ Shanghai up 0.28%. Hang Seng up 0.89%. And looks like the Taiwan weighted was closed yesterday or today. All right, so kind of just a meh day. I mean, looks like most markets were fairly close to the flat line, either, barely up or down. Very few things were really jumping today. So anyways, all right. If you watch regularly, you know what my thoughts are. We're headed towards the abyss and things are just going to get worse until then. All right, let's get to the market recap. S&P 500 falls as Nvidia slip. Rising yields overshadow quarterly earnings. Get my notes up here. Where was I? All right, here we are. All right, on Monday, the S&P 500 experienced a decline driven by weakened investor sentiment in chip stocks led by Nvidia and an increase in treasury yields. The surge in yields followed stronger than expected retail sales data, indicating ongoing economic strength and fueling expectations of a Federal Reserve rate hike before the end of the year. The 2-year Treasury yield reached a 17-year high as retail sales exceeded forecasts, rising by 0.7% last month, surpassing the expected 0.3% increase. Retail Sales Control Group, which has a significant impact on U.S. GDP, rose by 0.6%, well above the anticipated 0.1% rise. The odds of a December rate hike increased to 42%, up from 26% the previous week, as per Investing.com's Fed Rate Monitor tool. Bank of America reported quarterly results that surpassed Wall Street expectations, pushing its shares more than 2% higher. However, Goldman Sachs faced challenges with Q3 earnings missing estimates due to losses in its real investment and Greensky fintech businesses. A $358 million write-down on its real estate investment was attributed to the impact of such a sharp surge in interest rates. Johnson & Johnson upgraded its annual guidance after reporting strong quarterly results that beat both top and bottom line expectations. Lockheed Martin, despite delivering results that surpassed analyst estimates in Q3, saw its stock fall nearly 1% due to concerns about delivery delays of its F-35 jets. They're still making those things. Those things are garbage. I've been reading about that for a decade, that they're never going to hit the fleet, at least in any major capacity. Nvidia faced a significant decline of over 5%, leading to the broader chip sector lower. A Bloomberg report indicated increased U.S. restrictions on the sale of semiconductors designed by Nvidia for the Chinese market. The expanded curbs aim to close loopholes, allowing Chinese firms to evade export controls. While Nvidia anticipates no near-term meaningful impact on its financial results, the development contributed to the broader decline in chip stocks. All right. So I don't know if there's good news or bad news in there. It just is the news, unfortunately. Some things are good, some things are bad. All right. Next up, got an article here from Zero Hedge titled, Have Central Banks Lost Control of the Gold Price? All right. Gold prices have undergone a significant departure from predicted values, signaling a potential paradigm shift. The shift was initially explored in a March 2023 report suggesting that central banks might have lost control over gold prices. Historically, gold prices were influenced by real estate interest rate expectations, longer dated energy prices, and central bank policies as outlined in a model presented in 2016. However, recent deviations from the model have been sustained and persistent. So we can look over here. You can see where on this chart, the green line is the predicted and the gold line is the actual. And they've been fairly close all the way up through until we get to about 2021 or 2. And they significantly diverge. So that is weird. Where was I? Oh, here we are. Initially, as the Federal Reserve hiked rates in response to inflation concerns, gold prices followed the expected pattern by declining. The decline was cushioned by rising energy prices. Still, by fall of 22, it became evident that gold prices were significantly deviating from the model's predictions. In March of 23, gold traded $450 an ounce over the model's predicted price, reaching a record deviation. Currently, the gap is a staggering $668 per ounce, with gold trading at $1,870 an ounce, while the model predicts around $1,202 per troy ounce. The March report explored possible explanations, including central bank gold purchases and exchanges in the relationship between real interest rate expectations and gold prices. While central banks were on a buying spree in late 2022, they turned to net sellers in the summer of 23. The report suggested that strong central bank gold purchases might only partially explain the deviation. A significant change in the correlation between real interest rate expectations and gold prices was noted, particularly in the breakdown of the traditional inverse relationship between the 10-year Treasury inflation-protected security yields and gold prices. The report postulated that the Fed and other Western central banks might have lost control over gold prices, as observed during the massive rally in real interest rate expectations. The report contemplates whether gold's resistance to react to the Fed rate hikes is a symptom of a larger issue, the potential loss of control over the U.S. dollar by the Fed and central banks globally. Gold, historically a store of value, may be reflecting a lack of confidence in other currencies, with gold becoming a better arbiter of value. The report concludes that the gap between observed and predicted gold prices, influenced by foreign central banks increasing their gold holdings and persistently high inflation expectations, may be permanent, challenging the central bank's ability to control gold prices in the future. Well, there are some out there who argue that the major banks, central banks, can manipulate the price of gold, and that it should be much, much higher than it is today. Same with silver, but I think a lot of that has to do with the COMEX exchanges and things. It's stuff that's above my pay grade. I'm really not that deep into the nuts and bolts of those specific exchanges, so I can't really give you a specific answer either way. But like I said, there are many out there who speculate that the price is artificially manipulated. All right, one last article here. Where are we? U.S. manufacturing production lower year over year for the 7th straight month. That's not good news. In a surprising turn, both industrial production and manufacturing output experienced a notable decline on a seasonally adjusted basis, despite a reported 0.3% month-on-month increase in industrial production and a 0.35% rise in manufacturing output on a seasonally adjusted basis. The non-seasonally adjusted figures reveal a stark contrast, showing a 1.7% month-over-month plunge in industrial production, and a 0.5% month-over-month tumble in manufacturing output. This discrepancy emphasizes the impact of seasonal adjustments, potentially providing a temporary buffer for economic assessments. And that's probably my biggest complaint about all these statistics that come out of, the Bureau of Labor Statistics and all these government offices. They are massaged quite a bit before they actually reach the public. And a lot of times that's why they're revised down months later. So anyways, the unexpected 0.3% month-over-month increase in industrial production for September, beating expectations, marked the third consecutive month of growth. However, the annual comparison shows that the manufacturing output has been consistently lower for 7 consecutive months. Notably, business light vehicles, autos, production saw a significant 6.2% month-over-month decline, raising concerns about a potential repercussions of factory closures, especially in the context of the upcoming UAW strikes. The data suggests a nuanced economic landscape where seasonal adjustments play a pivotal role in shaping the narrative of economic performance. So be careful, whatever the data is, read a little deeper, get a second opinion, read someone else, read the other side of the political spectrum's article on it. That way you can get a real clear, if both sides agree to it, well, it may just be that both sides are full of BS, but typically if, one side will call out the other if, one is too full of, the smelly stuff. All right. Well, that is everything I had for today. I hope everyone has a wonderful evening. Unfortunately, the Astros put up another stinker yesterday. I mean, they waited till late in the game to actually try and score some runs, and it was a little too late after Framber, brought his gas can out to the bump in the first inning, and just it was a mess. All righty. Well, hope for better days. They play much better on the road anyway, so they're headed up to Arlington to play tomorrow and Thursday. So we'll see what happens. All right. Well, like I said, that's everything I have for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information there. I hope you have a wonderful evening, and I'll talk to you next time. Adios.